Hi, this is Charles Weeks with a very brief Barrister Brief prior to the July 4th holiday. Every once in a while, I like to share what I find to be interesting research. And recently, I read an article from Grant's Interest Rate Observer. It's been published since the early 80s by a man named Jim Grant, really brilliant writer, really brilliant analyst. And he shared something that one of his readers had sent to him. And again, thought it was really interesting. It's very pertinent to what we have today with inflation being at kind of the top of the headlines and you know more inflation risk ahead, possibly with some things going on in markets and in the world. So I want to read what this reader had sent in to Jim Grant. So and it has to do with us eliminating the penny from our money supply. So if we take 1950 as a convenient starting date, that being 75 years or about one lifetime ago, the purchasing power of a penny has dropped by 93% as the consumer price index has gone in round numbers from 24 to 321. So a penny in 2025 is worth about 1/13th of a 1950 penny. Naturally, nobody in 1950 thought they needed a coin worth 1/13th of a cent, and we don't need a coin of such little value either. A nickel in 2025 is worth about 3/8 of a 1950 penny, and the current dime is worth 25% less. So think about that. A dime today, which was worth 10 times a penny in 1950, is now worth 25% less than that penny was back in 1950. And this all speaks to inflation and how important it is for us to plan around inflation when we look at, what could potentially be a long-term retirement horizon that we have in front of us. So, again, you're not going to have a 75-year retirement, time horizon, but potentially retire at 60, 65, 67. You could have a 30-year time horizon in retirement, and even longer with the advances we have in medicine these days. So again, we're using the penny as an example, but you could just as easily use $1 or $10 or $10,000 or 100,000 or $1 million from 1950 and talk about how much that's lost its purchasing power over the previous 75 years. It's why it's so important to have a diversified portfolio, not just keep everything you have in cash. Money market accounts are paying a nice rate of return right now, 4%, maybe a little bit higher, a little bit lower in some places. But we can't get too comfortable with putting every dollar we have into a money market for 30 years. Because even though it may feel like we're earning 4%, we know we're really not. The real return is somewhat less than that based upon whatever inflation is. And the thought is inflation might be around 3.5% now, but it feels to most people that inflation is much higher than what we're hearing from government recordings, just based upon, you go to the supermarket and what it costs now to feed a family of four versus what it cost to feed that same family of four maybe just 5 years ago. So again, I think it's really important. We don't want to get too comfortable, in what we feel to be a very safe investment that we think is yielding something good, because over a long time horizon, that's not really our real return. That's just the return that we're getting on those dollars. That's not what the real return is after inflation. So again, putting things in perspective, the reader was Alex Pollock, who wrote this into Grant's Interest Rate Observer. So I want to give credit to everybody that deserves the credit. 1950, the penny is worth 1/13th of what it was then. And again, that's why we're eliminating it from our money supply at this point, because it doesn't pay for anything anymore. It's worth 1/13th of what it was. So at some point, do we get rid of the nickel, the dime, the quarter, all change, as those values are really not worth what they were at one time, possibly. So again, just interesting research and an interesting note that was sent in, and thought it was worthwhile to share. Put it in a financial planning perspective, why it's important to us, and just how important a diversified portfolio and growth is over time. So with that being said, I want to wish everyone a happy 4th of July, celebrating our nation's independence. So Enjoy the holiday. Take care.